Thank you very much and good afternoon, everyone, for this investment summit. And this time around, we are looking deep into the NAB itself. What is the NAB all about and how is it supposed to catalyze the impact investment space? I have a very interesting panel, very strong. And under 1 minute, lady and gentlemen, could you just introduce yourself? Tell us who you are. We'll find out more of what you have for us later on, but just basically who you are and where you're coming from. Let me start at the far end.
Sure. Thank you so much. And good afternoon, everyone. My name is Haggai Chomba. I'm the acting CEO of the National Advisory Board for Impact Investment. I've been with the NAB since its establishment in 2018. At the NAB, I drive our market and knowledge development initiatives, basically working with stakeholders around the ecosystem on initiative that I am at scaling the impact investment market. Thank you.
Okay, my name is Shupi Mweene. I'm also a member of the NAB and I chair the policy pillar. And other than that, I've been in the policy space in Zambia for a long time. I think over 25 years now. I've been involved in policy reform coordination and also investment promotion and SME development. Thank you.
Thank you. Good afternoon, everyone. As introduced, my name is Trevor Hambayi, and I'm a senior partner with Development Finance Associates. Development Finance Associate is actually a non-profit organization that is focused towards increasing access to finance for SMEs. But outside that, I sit on the NAB delivery working group, and I'm involved with the demand pillar, which is basically looking at the needs of the SMEs. Thank you very much.
Right, thank you very much. And Christian, tell us more about yourself.
Yes, good afternoon. My name is Christian Kinkombe. Since I can see that you spelled my name the Zambian way, let me start by saying that I'm a Danish citizen with a father from Congo, DR Congo. In March 2017, I co-founded 4P Group, where I'm a managing partner of the long career, working for a number of international organizations and think tanks. 4P Groups has one main product. It's called the SDG Toolkit, which capacitates both enterprises as well as asset managers to transition towards becoming respectively impact enterprises and impact investors. I'm also simultaneously the GP of a new tech impact venture capital fund, which we have decided to call the Invisible Hard Impact Fund, which takes minority stakes while also acting as a trusted advisor in board capacity in high growth and high impact tech startups in the global south, including Africa, and that demonstrate commercial viability in addressing social and socioeconomic obstacles and challenges. And last but not least, I'm a member of the board of the Swiss Impact Investing Association, for which I work to bring increased awareness about investing opportunities in Sub-Saharan Africa. Thank you.
Right, so ladies and gentlemen, that is the wealth of experience that we have before us this afternoon. So now we're looking at the impact investment space and we're saying what will catalyze all the discussions that we've had regarding every aspect about impact investment since we began. You've been enriched in so many ways as I have. But now we're looking at what are the catalysts that are necessary in order to have a thriving impact investment ecosystem in Zambia. It is founded on the following pillars, of course, the demand pillar, the supply pillar, and we're looking at the intermediaries, enablers, and government working together to bring about an ecosystem that actually works. Some of the challenges were ably brought out in the last discussion that we had, and now we have a group of panelists for you to discuss it in detail. Let's begin with you, Haggai. National Advisory Board for Impact Investment. For someone who doesn't understand what impact investment is, how would you explain it to them?
Yeah, sure. I think it's important to maybe talk about what impact investment is not. And more often people would confuse impact investment with philanthropy, which is funding which is targeted at addressing social or environmental issues, minus return. So impact investment is not philanthropy. The other spectrum of the investment spectrum is traditional investment. And within the traditional investment space, these are investment being made without any regard for either outcomes that investment is trying to achieve, and they have no regards for either social or environmental return. The whole basis of traditional investment is to make profits. But what impact investment is trying to do, and what it is actually investment which is being made in organizations or funds with the intention of creating a positive social or environmental impact alongside financial return. So it's using the dual power of solving social or environmental issues affecting our communities, as well as our society, at the same time being sustainable, making financial return. And the returns range across various spectrum. They can be above market, they can be at market rates. Sometimes they can be just the total cost of the return on capital. And what we've seen with the impact investment and its promise in Zambia, but also globally since it was coined, is that it's addressing key issues that our society is facing in a more sustainable way. We know that philanthropy or foundations have got resources, but they are very, very limited. Government funding as well is another avenue for financing most of the activities of the economy, but we know government have been grappling with fiscal challenges, debt to be particularly, not only in Zambia, but globally as well. So what impact investment is doing is using markets as a force for good to really address social and environmental issues in a more sustainable way, in a way that they can create return, but at the same time address issues that we are facing in society around poverty, around climate change, and many others. And our role as the National Advisory Board for Impact Investment is really to build the ecosystem, which I'll probably talk about a little bit more in our discussion, in terms of how can we scale, how can we build the market in Zambia through working with various stakeholders.
Quite obviously, this was new ground in Zambia. Any major challenges, achievements so far?
Yeah, sure. So since our establishment in 2018, so we are part of, just for some context, we are a part of a global organization called Global Steering Group for Impact Investment. As you could see from most of our banners, we are lighting a member of GSG. And what GSG is doing is they are driving global movements for impact investment, and they work through the National Advisory Board, and there are about 34 National Advisory Board globally at the moment. 3 of them in Africa. First one was onboarded in South Africa in 2018, ours in 2019 together with Ghana, and they are now transition or other task forces which are being formed in Nigeria as well as Kenya. And since our formation in 2018, and later on we got onboarded to GSG in 2019, we convened stakeholders, and I'll talk about a bit more about our role is really to mobilize stakeholders and resources to support the creation of private sector-driven impact economy. And since the establishment of the National Advisory Board in 2018, we convened key players from the ecosystem, and we are defining as the moderator clearly defined that the ecosystem is contained or comprises of 5 key pillars, and these are stakeholders that the National Advisory Board for Impact Investment serves, which is the suppliers, particularly investors, pension funds, institutional investors, and other investors. But we're also working with intermediaries, and these are players which are helping transfer or fund businesses, but they mobilize their capital from large institutional investors. There's other category as well that we're working with, which is the market builders. And the market builders are organizations such as consulting firms, research think tanks, which are very, very key also for promoting the growth of impact investment. And lastly, also have policy, which is very, very key, called impact has to thrive on good or conducive policy environment. So since our establishment, we put up a task force, which is expert around the impact investment ecosystem in Zambia, comprising of these 4 pillars or stakeholders that I just mentioned. And since then, our work has been how firstly do we raise awareness of impact investment in Zambia. It's still a very new concept globally and particularly in Zambia. And what we're trying to do is how do we, before we can start implementing various projects with these key stakeholders, how do we make them understand, aware of the impact investment promise from social enterprises to pension funds to government. And throughout the establishment, we have been key in promoting awareness among various stakeholders through events, convening them, in working collaboration with them to really make them understand their role that they can play in building an impact economy. Over the last few years, the past 2 years, we've been reading also in ensuring that most of our work that we're doing is based on data. I think data is very, very important for the growth of the market, and minus data, key initiative within the market development cannot take off. So we have got a unit called Research and Knowledge Development. Within there, we are working on synthesizing data, but also doing research within the impact investment ecosystem to inform our policy advocacy, but also other initiatives that we are doing within the market. And the key studies that we've done, the mapping of the impact investment ecosystem, which you can find on our website. And recently we sized the market, what we're calling the impact investment market sizing study, and the climate survey that was launched recently. We are also working particularly in the market development space to see how we can mobilize capital, especially for small and growing businesses, which are inherently disproportionately disadvantaged when it comes to access to capital. And there are a whole chain of issues around there which really affect small businesses. And our role as a National Advisory Board is to put up interventions through working with our various stakeholders in terms of how we can work or partner with local stakeholders, create a platform where these stakeholders can come together, mobilize resources, and we've been working with the Central Bank of Zambia and setting up the Credit Risk Guarantee Fund. I think I'll end here and I'll be able to mention a few other things. Thank you.
All right, thank you very much. Let's come to you, Mrs. Mweene. The success of any activity anyway is dependent on the working environment. What is the policy and regulatory environment with respect to impact investment in Zambia?
Thank you. That's a mouthful, but just to answer that, that's the objective of this summit, actually, to just hear from the stakeholders what the gaps are. But other than that, I can just run through. There are gaps in all the 5 pillars. So just to summarize, first and foremost, as we heard in the very interesting panel in the morning from Sharon, that there is actually no legal framework at the moment for impact investment. And that's not strange. It's because it's a new concept. So obviously the policy and the legal framework is not there. So that isn't there. So that's a gap. And because of that, there are so many gaps that were alluded to that are in the Companies Act. So there's no definition of social enterprise because it's new. There's also a new concept that as NAB and as working through ZDA and IBAN and GIZ, we're also looking at the ecosystem of inclusive business. It's also not there. If you go to the Companies Act and any of the laws, it's currently not there because the concept is new. And also the definition of impact investment is not there. So the absence of this obviously has an impact when you come to Ministry of Finance and them looking at incentives. As we heard in the past 2 days, there's been talk of fiscal and non-fiscal incentives to propel the impact movement. But because of those definitions not being there, those types of companies not being there, then it becomes difficult to give incentives. Then also the issue of measurement. So you can talk about impact, but what is important is to know the definition of impact, to know how it's measured, to have standards, to also have accreditation, because working with, they need to be accredited. You need to say, okay, company X is an example of an inclusive business. So now those standards and how to measure that and who accredits is an issue. And how do you report? In the morning, again, there's issues of disclosure. How do you disclose something which is not defined? So all those are gaps in the legal framework. There are also gaps on the ESG, the environment, sustainability and governance issues. They're not there in the obligations to directors. So you're not obliged to report on what you're doing on environment, what you're doing on governance. So all those need to be there. And the whole issue of inclusivity, as we've seen here, it needs to be embedded in such laws so that even companies, we've been talking about the gender issues, gender is part of this movement of inclusivity. So if they're not obliged to report and it's not defined anywhere, then they won't do it. But the interesting part is that companies have to move in that direction because most of the shareholders are demanding that. So that's on the legal side. Then now on the supply side, we had an interesting discussion yesterday where we heard from NAPSA that there are some legal challenges, but there's also advancement that they've made. Even today we heard from SEC that both the regulators in the financial sector are working tirelessly to bridge those gaps. But on the supply side, we need what we call the big boys, or maybe I should say giants, so that it's gender neutral. We need the likes of NAPSA, ZCCMIH, to come on, IDC, to come on board and to put the money on the table so that we use that to leverage funds from outside. So for them to do that, especially for the likes of NAPSA, maybe there are certain legal things that they need to tweak, or or guidelines they need to do for them to be able to put money on the table. They mentioned the $300 million yesterday, but the issue was on risk. So how do we de-risk? So they are not so much on the legal side, but it's both the legal issues and also institutional issues that need to happen. The other gap on the supply side is this very innovative financing model, which is called the results-based framework, where you have investors who want to invest in the social sectors like education, skills, health, water and sanitation. But mostly investors won't come to a country if they feel that the country is not credit worthy. And you know that we've had debt issues in Zambia, and the president yesterday, if you watched the news, was talking about how we need to do away with corruption and to do the right thing. So that brings in the credibility which investors need to have for them to invest in innovative instruments like the social impact bonds and development impact bonds. On the demand side, there are also policy issues. You heard the SMEs. It's one thing for investors to want to come to Zambia, but are we ready? So where are the SMEs? Are they ready? Are they ready to do the work for them to be able to access? So of course, Trevor on the demand side will talk more about that, but there are legal issues there or policy gaps. Right now, we're sitting on an SME policy, which I must brag that I was very instrumental in formulating some 10 years ago, but it's 10 years old. Actually, it's more than 10 years old. So now that we have a new ministry, we need to relook at it and see what we can do about it. So there's a gap there, and we've heard from the panelists what needs to be done. We're not short of brains, we're not short of what to do. So there's a gap there. Haggai talked about the pillar for enablers and intermediaries. These are research institutions, BDS providers, consultants. They need to also step up. And there's a gap in terms of maybe competencies. We need to capacity build. But the most interesting thing is, again, what Sharon said, that there are associations like the legal LAS and the legal fraternity. There's a lot that they can do in the space of SMEs, but maybe they need to tweak something in their laws for them to fully participate in helping out SMEs. She said so many things in the morning, which was very interesting. And also, lastly, in terms of gaps on the policy side, is the whole silo mentality, how we operate in Zambia. And we are all doing big things, but in silos. So the biggest gap, and hence the summit, and hence the NAB, is to bring all the ecosystem players together to see where the gaps are and to work together. You heard from Elias, who beautifully said that we need a holistic approach, and that's what we want to do on the policy side. We need everyone to sit on the table. We have Lusaka Chomba here, but we need Zaki to be on board. We need all these associations to come on board. We need the private sector. We need cooperating partners. Of course, we have them, they are here, but we need more. And also the banks. So the issue with the policy space is always to talk and not to talk once, because the process, policy and regulation is not a one-off thing. It's a continuous thing. Like the previous guy talked about a line. So with policy, you always have to tweak, you always have to talk, and there's been fragmentation. So what we need is proper, coordination and in a holistic approach. So those were the gaps, Moderator.
Yeah, very interesting and spoken very well. Christian, let's have you come on now. You recently sized the Zambian impact investment market. What are some of the key highlights of your findings in relation to what has just been said?
Thank you, Moderator. So as Haggai said in the beginning, the study is called the Zambia Impact Investing Market Sizing Study, which is basically a follow-up study building on a previous Zambian landscape for impact investing baseline study. And our study reports, addresses and analyzes both the so-called private asset impact funds, that is the non-development fund institutions self-identifying as impact investors, but not necessarily according to the official GIN definition of impact investing that Haggai also alluded to in his opening remarks, as well as the DFIs. The study compiles data on 23 asset managers, of which 4 are actually headquartered in Lusaka, Zambia. The rest are located in 12 other countries. In terms of asset under management study, survey covers 5 DFIs and another 18 non-DFI active impact investors, altogether having completed 34 direct investment in Zambia from 2019 to 2020, with altogether are deploying capital into impact enterprises across 7 impact sectors, such as financial services, renewable energy, real estate, agriculture, food and agro-processing, waste management, and tourism. So the study aggregates a total of $85.17 million of asset into 28 impact enterprises, and 42 if you're including the DFI projects as of the end of 2020, which were split between 47 million provided by the DFIs, 36 million provided by private equity, and then high net worth individuals provided 1.4 million and crowdfunding less than 1 million. So the DFI's project market size account for almost 90% of the total market size of impact investing in Zambia during the 2-year period that we're looking at in the study. So although quite small when compared to the size of the DFI's market, the non-DFI market is on the contrary much more diverse in terms of geography. So in other words, the impact investing market size was equal to 550 million across 3 years from 2015 to 2018, while in 2019 alone, the figure was more than 120% of that of the preceding triennium. So as of 2020, instead, the COVID-19 outbreak completely limited the investment such that impact investing accounted for only $7 million across the first 2 quarters of 2020 without counting the DFI loans. Then subsequently, the market faced a quick, even if not full recovery across the 3rd quarter and the 4th quarter of 2020, especially thanks to the European Investment Bank, the US Development Fund Institution, DFC, and the Development Bank of Southern Africa's loans. The impact investing market was not one of the sectors affected compared to others, and the biennium 2019 to 2020 produced an estimated impact investing market size of $703 million. $703 million. A figure higher than the inflow obtained each of the previous 3 years, the average deal size for impact enterprises in that period is just about $3 million, whereas the average deal size, including DFIs, is more than $17 million. And over the period covered by the study, 69% of the reported impact were recorded in debt stock, while 31% were equity deals. And the average deal size for the impact deals in that period was $2.83 million. Also, the main type of capital provided by the impact investors is growth capital, 60%, with seed capital being the second largest type with 28%. On the other hand, unfortunately, the impact investment generate on average only around 2.7% of return on investment. If you just will allow me, moderator, to speak for another 30 seconds, since we are talking about impact investing, I should say that the study also investigated not only the fund management landscape, but also how investors are using impact measurement and management tools. And the research shows that many of the impact investors investing in Zambia that period share a common approach in providing solutions to society's biggest challenges today. For example, in terms of targeted challenges, for most of these investors, the primary objective is to respond to SDG 1, which aimed at tackling poverty. And so when it comes to setting objectives, a significant proportion of investors recorded to have invested in Zambia between 2019 and 2020 focus on addressing SDG 1, SDG 2, and SDG 8. And I think I'll leave it at this. The rest you'll find in the report. Thank you.
Thank you very much. A very comprehensive overview of exactly what is going on. Now, Trevor, listening to that, let's take it home now. You're on the ground, the demand side. How does that figure in terms of Zambia? What is the demand side state in Zambia, and where do you see the opportunities for impact investment?
Thank you, moderator. The demand side for the SMEs in the country is quite an interesting one. First, if you look at the capital available on the market, which is the financial market, our capital market has around $3.2 billion in terms of a funding portfolio. That portfolio is 51 to 66% is actually taken by government in bonds and treasury bills. Another 27% actually goes to consumer lending, which is basically payday loans. It leaves a 13%, which is actually what the private sector is having access to. The private sector, we have got a 58,000 project as formal entities. And of these formal entities, the only amount that actually goes to SMEs is $70 million, which is less than 2% of what our market is providing. We must understand why these challenges are there. And what comes into play is, why are the SMEs not able to access the funding? And there are a number of things that come into play. The first one, which will also apply when we're talking about impact investment, is ticket size, is that our SMEs are generally looking for a very small ticket size, which is not appealing either to the financial institutions or to the investors from who want to do external funding. And the second one is governance structure, is that our SMEs do not have the governance structures that are speaking to the utilization of these resources. Then we have obviously got to get past the issues around the financials, that they do not have the financials, and the scalability of those projects, that these SME projects must be scalable for them to be attractive to the potential investors.
If you looked at the report that was launched yesterday, 44% of the potential investors are in the debt space that are going to provide debt financing. There's 26% that is speaking to venture capitalists. And in terms of venture capitalists, the key issue that will come into play is obviously the exit clause that is coming after the scalability. This is not a very easy challenge, because of obviously our capital market in terms of the stock exchange is not very well developed. We've had it for 25 years, and we have not had an SME able to raise funding there or actually list for an IPO. And that is also going to be an issue when we speak about venture capitalists. We've got 19% that is private equity. 19% private equity, and I think this is where we're we're looking to be able to try and see whether we can increase collaboration or private equity to come into play. But you realize that the major component of the financing platform has already been excluded from the 44%, which is finance. And I think that is key in terms of the position where the market in the demand space is. You would want to look at issues around scalability. And in terms of scalability, obviously, from an investor's perspective, there are two things that they'll be looking at, which is their profit return, and secondly, is having to scale the business. And this has also been, the positives obviously is that on the African continent, which is also where we are in the country, is that we are a very attractive destination as an emerging market in terms of return on investment. The challenge has been on scalability. And in scalability, yes, we need to exploit the potential that is
Recording
there
in progress.
with our regional countries, because then they create the market size that will speak to profitability. I think let me end there for now.
The government has placed emphasis on promoting the green economy now. The minister was with us, and a lot of discussion was had, especially this morning. The Bank of Zambia even indicated they have a green policy. What is happening in the greening of the policy space in terms of impact investment?
Okay, thank you very much. As you've said, right now, actually, the ground is so fertile for the policy space, and more so on the green side, there's a lot of goodwill. We have a new ministry, an entirely new one, and there's a lot of money, like we heard in the morning, that is available for people to participate in the green space. So there, as NAB, under the policy pillar, what we'll do from here. Yesterday, the minister actually, he extended an invitation to us to join hands with the ministry so that we partner to work on policy issues. So right now, as I said, in terms of gaps, they don't have a policy because it's a new ministry. So there we will be able to assist, and also anything to do with any legal instruments that need to be developed. And the beauty with working with the NAB on the policy angle is that we're part of the GSG group. So we come with the global expertise, so we're better placed to assist in that regard in terms of what would be needed, even institutional setup, policy, guidelines, strategic plans, implementation plans. We're better placed to assist the ministry in that regard. And also, in as much as you didn't ask me, but the other opportunity is with the new SME ministry. So even there, we have local experts, but we also have, the international best practice that we can pull from GSG and our other global partners.
Thank you very much. Haggai, Shupi talked about, basically she was saying think globally but act locally. How do you see the NAB positioning itself to take advantage of these new developments and the impact development space? A lot has been said throughout the workshop and throughout the summit. What are your key takeaways which you think that the NAB can use in this respect?
Sure. Thank you so much for that. So as the National Advisory Board, we guided by our strategy, which is the 2020-2022 strategy for impact investment. And basically, our actions from now until 2022 are focused on those 4 key areas. One is how can we develop the market? And when I say how can we develop a market, I mean how can we mobilize increased volume of capital in Zambia, both from local but also from international investors. And within there, as Shupi rightly said, we're working with various stakeholders, obviously leveraging our global affiliation to the Global Steering Group for Impact Investment, to work on initiatives that are aimed at attracting capital in Zambia. And we are currently, for example, being supported by the World Economic Forum for COVID Social Entrepreneurs Alliance, and also the Sustainable Development Investment Partnership. These are global organizations that are interested in supporting countries, particularly those in the global south, in terms of designing pathways to attract or to mobilize more capital, especially to small and growing businesses. We've got a little bit of bias to small and growing businesses, obvious for many reasons, because they constitute a large share of international of all businesses, about 90%, over 90% or so. And the second thing that we're trying to do is how can we collaborate as well with various stakeholders within the policy space, because we think for impact investment to grow, both the market as well as the policy has to move. And within there, we partnering and also working with various stakeholders, especially the central bank. I think central bank was here in the morning, and other regulators. There's positive developments going on in the policy space, but how NAB can act as a platform to harness those developments and channel them or transform them into results and impact, both in terms of scale, but also in terms of capital. So these are some of the key initiatives and important things that the future of impact investment looks like. And it's also one thing to also mention that one key area which we are also focusing on is communication development. The idea of the NAB is that we act as a platform for all stakeholders to come together to work on initiatives that are aligned to impact. And through our work, we've got very open door policy, leveraging stakeholders, both locally but also internationally, who are willing but also share our same vision in terms of mobilizing capital for green, for impact investment. And these are some of key areas that as we transition and as we move on, obviously with the promise of the new government, but also in terms of key initiatives which are going on in the stakeholders, we promote partnerships so that work that is being done within the ecosystem is not done in isolation, but we provide a platform where people can come together and structure projects within these key collaborations that are meant to achieve impact. So I thought I could mention that.
Thank you very much. Now we had a technical glitch on the virtual platform. Christian, are you still there?
Yes, can you hear me?
Excellent. Now, with your experience, if you compare impact investment ecosystem growth across different markets, for example, Kenya, Zambia, we see that there are differences in the way that the ecosystems work. What is the best way that the NAB can take advantage of the peculiarities of our situations to have better ecosystem for impact investment to work in Zambia?
Okay, thank you for that question. So please allow me to refer to a recent study that came out last year by the Africa Venture Philanthropic Association. They actually identified more than 820 social investors active in East, West, and Southern Africa. And the majority of social investors have a focus on East Africa, which can be attributed to that region's economic growth and increasing level of entrepreneurship and innovation over the years. If you look at, similar to the development finance institution, the non-DFIs focus largely on enterprises in financial services, energy, agriculture, and health, as I said in my previous intervention. Most of the investment favored technology-driven enterprises, especially in the financial sector. So while East Africa has a relatively well-balanced portfolio for the top 3 sectors, in the West and Southern Africa, this is highly skewed towards financial sectors. So most of the non-DFIs deals in the region focus on early-stage businesses, accounting for a larger number of deals. And at the same time, a significant financing gap remains for enterprises at the growth stages across all regions. So this reflects the challenges faced by the so-called missing middle enterprises in sub-Saharan African regions. Regarding the enabling environment for social enterprises, so Southern Africa region is ahead of both East and West Africa in terms of the establishment of policies and regulations aimed at boosting the growth of the sector. Although, as Shupi made reference to in her intervention, that policy and regulatory framework is still non-existent in Zambia. While there's also a growing number of incubators supporting early stage businesses, these are highly concentrated in Kenya, Nigeria, and South Africa. Further, most of the incubators are found only in the main cities in these countries. Although we've seen recently in Tanzania that they also have actually incubators and accelerators outside of Dar es Salaam. Across the regions, the limited support exists for growing businesses and SMEs with a few affordable accelerators and technical assistance provider operating across the countries. And international donors and foundations are the main sources of funding for technical assistance, as we've seen in Zambia with the important role that Prospero is playing in Zambia's ecosystem. This perhaps explains why, for example, that North Africa is the biggest beneficiary of foreign direct investment in Africa in 2019, followed by Southern Africa, then East Africa and Western Africa. If you take the case of South Africa, it actually attracts more projects than Egypt, but Egypt, on the other hand, attracts more than double the capital and also create nearly 3 times more jobs in South Africa. And according to a report by Ernst & Young, Zambia, in terms of being an FDI recipient by weighted criteria methodology, was ranked 15 in Africa. But it's also important to bear in mind what is found by the World Bank Enterprise Survey, looking at the biggest obstacle for SMEs in Zambia. And these are access to finance, the practices in the informal sector, among others. And this is, and to that I would like to add in closing, the startup ecosystem. If you are looking at, and I know there are some issues about the methodology used by the Startup Link, but if you look at the total score for Lusaka, it gives the city the rank of 877, down 72 places from the previous year, much lower than Abidjan, West Africa, or Dar es Salaam in Eastern Africa. So this further underscored by the World Bank now defunct Doing Business annual report, which ranked Zambia as number 117 in terms of starting a business. So these are some of the factors explaining the variations in the impact investing between Zambia and some of our neighboring competing countries. Thank you.
So in one sentence, what do we need to do to attract capital to Zambia for impact investment? One sentence.
Well, what can we do? In one sentence, that would be difficult, but if you're running out of time, if you will allow me to refer to the responses that we got from the survey of the impact investors investing in Zambia. So very quickly, if you allow me. So they highlighted the following issues: policy certainty and stability of the political system. Fortunately, it seems to be sorted out with the recent election. Creating the right incentive to attract private capital, more involvement by institutional investors, especially NABSA, creating a deeper pipeline of investment-ready companies with a genuine impact focus, and having more access opportunities for private equity investors, stability of the electricity power grid system to avoid reliance on expensive diesel generators, asset leasing, for example, productive use of asset targeting agriculture and small businesses at the bottom of the pyramid, and smallholder farmer aggregator schemes, that is sourcing from local smallholder farmers, and growth in investment services. More funds and more impact investing advisory services are needed. And then finally, growth in the Green New Deal around the world and shift to renewable energy. And most importantly, also a significant investment in human capital development. These were some of the key recommendations coming out of the 23 investors investing in Zambia in the past 2 years. Thank you.
All right, thank you. So Trevor, that sets the ground for your question. Having heard what you've just heard, how can Zambian businesses derive benefit from what the NAB is doing in the impact investment space?
So from the NAB's perspective, I think the NAB is been working towards having to create a funding-ready pipeline of projects. And this is basically to ensure that the projects that are looking for funding are actually ready to be able to access that funding. NAB was engaged with the central bank in having to work around the medium-term relief facility to be able to see how well this can be aligned towards having to actually reach the SMEs that were affected. I mean, this came out of the impact of COVID, and we're looking at having to mitigate the impact of COVID towards the small businesses. And it is important that we realize this. One of the key aspects that we do have, obviously, is that the financing criteria that we are using to be able to support the SMEs is not aligned to our environment. That we do find this financing criteria, which is of international standard, which is speaking to the fact that we do not support a startup in this country. If you look at our ecosystem, 60%, 80% of our entrepreneurs that are looking for funding are startups, and we need to be able to design a financing model that is speaking to that ecosystem, which is ours. We've got a criteria which requires our SMEs to have audited financial statements to be able to access funding, and obviously we know that our ecosystem does not allow our SMEs to be able to have audited financial statements. And I think this is one of the areas where we really need to be able to work towards having to support this sector of the SME to ensure that we have got a criteria or a financing model that is speaking to the specifics that are aligned to what is the reality on the ground. I think that is the quick one that I would have.
Okay, and that's a very big ouch there, where you're saying that our local companies cannot participate easily because of the working environment which has been imposed on us in order to be able to have access to funds. Just off the cuff, Shupi, how does that feel for you in the policy space?
No, actually, for me, it's not an ouch moment, because that is what we're going to be working on. As I said earlier, with the new Ministry of SME, those are the things that we need to look into. So we're going to look into that on the policy side.
All right. With that, then, having been said, Haggai, you must be one of the happiest people in the room. You've got so much insights from this summit. What are your takeaways?
Yes, thank you. There's still a lot to digest. I think the content that we plan for the 2-day summit is so critical for us. One, for providing a platform in which we can engage stakeholders. But secondly, also in terms of how we can meaningfully collaborate with them in terms of really structuring key initiatives or activities around the ecosystem. And we want to use this opportunity, but also platform and many recommendations, call to actions that are coming from this summit to then build up the momentum in terms of engaging. So we'll be using this platform to now engage on a bilateral with some of the stakeholders present here, and also those who did not come, but also kind of create a framework or an action plan in terms of how we can meaningfully convert some of this conversation, also recommendation that came out of this summit to more practical issues in terms of projects. So we're quite very excited in terms of the content, but also the participation both from the speakers, but as well as from the delegates who participated in this summit. And as our role as a market builder is to really engage all the stakeholders within this space to really try brainstorm on key issues, interrogate them more effectively to see how we can build an impact economy in Zambia. So I guess my one key message is that we'll be knocking on your doors post the summit to see how we can engage and collaborate further. Thank you.
All right, thank you very much. Let's move over to you, Christian. What do you think the NAB can do better? You've been associated with us from the beginning. What can we do better?
Thinking about, well, first of all, allow me to congratulate my former colleagues and members of the NAB Zambia for having organized an amazing event. Since this event unfortunately collided with the Swiss equivalent, which is called the Building Bridges, which means that I missed all of yesterday and some of today's sessions, plus I'm no longer a member of the NAB Zambia. If you will allow me just very briefly to draw your attention to this event called the Building Bridges Program, which consists of a summit, well, you can't see it here, and then you have the week program. And the hope is that this might inspire you when you prepare the next edition of the Zambia Impact Investing Summit and think about how to leverage your successful event. So if I may, just for a couple of minutes, yesterday, because the Building Bridges Summit was held, and it's launched a week or 3 days of 77 events, and it's convening a unique group of key Swiss and international decision makers and world-renowned keynote speakers around a common vision and objective, namely to accelerate the transition to a global economic model, or what Haggai call an impact economy, aligned with the imperatives of the United Nations Sustainable Development Goal, with finance as a key catalyst for change. The first edition of the Building Bridges was held 2 years ago, and it brought more than 1,000 stakeholders from diverse backgrounds in Switzerland and internationally together in Geneva, including even the president of the Swiss Confederation, the Director General of the UN system, and numerous CSOs and opinion leaders representing NGOs, business, academia, and international organizations. And then you have the actual week, which is called the Building Bridges Week, which is actually a marriage between high-level support with broad community engagement to enable the creation of true movement and collective ownership rather than one-way dialogue. So this week actually comprised crowdsourced program, and that would be one of my recommendations, a crowdsourced program of events planned by the Building Bridges community, that's the ecosystem in Geneva, just like we have an ecosystem in Lusaka, in a range of formats that stimulate deeper levels of dialogue, collaboration, panel discussion, roundtable, workshops, training sessions, pitches, networking events. And also this week is open free of charge for everyone, the entire sustainable development ecosystem. And each of the organizations within the ecosystem are actually invited to submit an event proposal to the event program around 3 cross-cutting themes. So you have like impact transparency, which could, for example, focusing on impact measurement and reporting, where we have a 4P group, we have a session in that theme. We also have a theme on supply and demand mismatch, where the Swiss Impact Investing Association is organizing a session about how to rethink mainstream investment strategies to be more comprehensive, impact-driven, and SDG focused. And lastly, FinTech for SDGs, where we also have a session on that, focusing on some of the new technological tools that will improve the transparency and impact measurement. So basically, in short, in conclusion, the Building Bridges is a joint initiative launched by Swiss public authorities, the finance industry, the United Nations, and other international partners. And the 2000 event this year is building on the success of the previous edition by leveraging unique Geneva-based ecosystem to finance sustainable development. And also, as Haggai referred to develop concrete, actionable targets. So I think you are on a very on the right way. I think you have a fantastic program if you benchmark this compared to the program we have in Geneva. So well done, Haggai, and well done the rest of the NAB Zambia for a fantastic event.
Thank you very much, Mr. Christian Kingombe. Now, for the last 2, we have done a lot of talking. How do we need to walk to make what we've been discussing a reality? Beginning with you, Trevor, what are the takeaways for the demand side of businesses in Zambia of the summit?
Laurian, what I do see obviously is from the demand side is that for entrepreneurs in the space is I think that we must realign to the financing models that are coming into play, and all the financing models that are coming into play are obviously speaking to conservation agriculture, whether you want to call it smart agriculture. In terms of what we're producing, we need to be able to look at having to reduce carbon emissions, ensure that we are maintaining green energy as well as green climate, that we are not aligned to deforestation. And I think for any business that is moving forward, it is important that they are able to realign their business to be able to accommodate these factors in terms of where we're going from here. Thank you.
Right. Thank you, Trevor. Shupi.
Thank you so much. Yeah, so for me, the question you had asked Haggai, that he must be so happy. I'm the happy one because most of it has been about policy. So I've so much to do right now, and I'll hit the ground running. So the first thing is to actually set up a task force sounds, but just like maybe a steering committee with, key stakeholders, so that we immediately from this, we write a long list of what we need to do, and then we prioritize in terms of time frames, what we can do immediately, what we can do in the short term, what we can do in the long term. So everything is cut out for me. I have so much work to do. And also the other part is that from here, we have a big opportunity because the 8th National Development Plan is still in a draft stage. So most of the recommendations here will beautifully feed into the 8th National Development Plan. And most of our cooperating partners, they align their country assistance programs to the 8th National Development Plan. So with these recommendations being in the 8th National Development Plan, then they, as they do theirs, will then take them on board. So I see the next 5 years being very interesting, and I see us actually moving into an impact economy. And just to summarize and to bring it back home, especially in the development economy space, you know, in Kaunda time, we had the socialist kind of economy where the state was king, the government was it. Then we moved 25 years ago, in that period, we've had a sort of capitalist system, and we've seen it brings with it innovation and certain efficiencies, but it also brings issues of increased inequality, exclusion, and environmental externalities. So now we're seated here at a verge of, you know, ushering ourselves into the impact economy, which is a transformation of the capitalist system to bring in people, which is the other P from, you know, the profit. So now we're bringing in the social aspect, which is the people. We're also bringing in the planet issues, the green issues. So we are sitting pretty, and we must all be proud, actually, that we are at the dawn of a new dispensation, which is impact. Of course, it will have issues we have to tweak here and there, but what we should do is not to say that we've arrived. We should, you know, move in a straight line and always innovate and dialogue. And yeah, so I'm very happy as a development economist to be at this stage right now. Thank you.
And on that very bright note, I'd like to give a very big hand to the able panelists. Could we? Who have ably talked about the role of the NABI in catalyzing the impact investment ecosystem. My name is Laurian Haangala. Thank you very much.